Good morning, traders. Happy Monday. It is the 28th of February, 2022. It's 8:02 a.m. here in Chicago. This is episode number 2180. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, an initial kind of disclaimer is that I came in late last night from Vegas from the money show over there, and there have been just a lot of technical issues this morning, so I don't have the pre-market summary sheet in front of me, unfortunately, because it's an important piece. So I'm going to start off today by just looking at the overview chart in Edge Pro X. In this chart, we see that we've got the S&P almost returning to its monthly VWAP. I watch these monthly VWAPs on a bigger time frame just to see how we're behaving for the month. Not that a month is an end-all be-all, but what I notice is very often when we start to see strength, we see the market move away from the monthly VWAP and then come right back to it. That number's 44.15 for the S&P. The Dow, you could see, has touched it and come right off. And then the Nasdaq's just a little bit off. The Russell has been tangled in its monthly, as it overall, the Russell is a sideways product right now. It took a big hit in January. It moved very hard to the downside, harder than on a relative basis against the other products, the other U.S. products, and has remained weak throughout February. So it's been in this relatively sideways range. The gold ran up quite strong last week, and you can see it's just coming right back to its to the VWAP here, and so on and so forth. I want to remind you that this is the last day of the month. The last trading day of the month. The treasuries are moving up slightly. The 10s and 30s have gapped up slightly. There's a flight to risk this morning due to the movements overnight, over the weekend, by the EU and the U.S. against Russian banks, and by seizing $400 billion worth of currency, Russian assets, and things like that as a result of this war that Russia has embarked on against the Ukraine, against not the Ukraine, against Ukraine. There's no the. And so that's impacting the markets. It's impacting the macro products, namely crude oil treasuries. You should look at the U.S. dollar expressed in rubles, U.S. dollar ruble pair, and metals and so on and so forth. So we actually had an open in the ES that was inside of Friday's range, and then we moved down quite a bit. The overnight low being 42.51, right down here, 42.51, and we came right back into Friday's range. So we're still trading inside of Friday's full session range, and we're holding this 43.43, this really important 43.43 balance, which comes to us from here and from here. This 43.43 balance was tagged overnight. The overnight high is 43.42 and a quarter, so right up against it. There's a lot of headline risk, and I'd warn you that this is not a very good environment to day trade. It's just as easy to give up your entire day as to make it's harder to hang on to big moves, and it's very easy to get caught up in a headline move So I would really strongly suggest kind of letting the market, if you are going to trade, um, letting the market kind of set itself up and do its thing. You can see there's a cluster of moving averages and things like that. The 20, the 200, the monthly VWAP on an RTH basis, all of those are clustered in this 44.20 to 44 range. We're at 43.43 is that balance area. We're 100 points below that. The movement on Thursday and Friday was quite bullish. Friday closed really at the high, and we ended up with a very weak high on Friday's high. You can see there's a cluster of volume right here. There's no taper at the top of last week's high, with a profile that is just very, very, very jagged. Heavy price discovery last week, and pretty big ranges, and pretty strong volume, relatively strong volume. So far, the S&P is traded a fair amount. The volume is relatively high this morning. And I just want to, again, please, it's not necessary to trade the volatility. If you aren't consistent, or if you're not someone who can comfortably come in here and say, yes, I will likely pull something out of this market, as I usually do. If you're not that kind of person, excuse me, I would urge you to stand aside on your live account. I would recommend that you switch to your paper trading account or sim account. If you don't have one, I welcome you to reach out to edgeclear.com and get one. Just move to your sim account and practice your trading plan and your trading method on that sim while this market has so much headline risk. So it's really important, if you are trading live, also to just stand aside at the open today. Let's see what the main forces want to do on the open today. Let's see what they decide before we jump in head first. The S&P has traded 487,000 contracts so far. We have pushed back almost to the neckline here from Friday, and again against that 43.43. So we opened in range this morning, in range of Friday. Pretty big gap down. The open's 42.98. Yes, Friday settlement's 43.80. So we have about 81.25 points in a gap, which is quite big. But this gap is an internal gap on what was a P-shaped profile. This is a P-shaped profile. This was a short covering profile that found balance above the 43.43 and was looking quite bullish. The point of control is right at Friday's high. So if under normal circumstances, what do we expect? For those of you who've been here a while, under these circumstances, under that profile shape, what would we have expected on Sunday night given Friday's close? Can anybody tell me? Let's see if you guys have been paying attention. What do we expect when the market has a P-shaped profile with a point of control at the high? Continuation. That's right. We expect it to continue discovering. Why? We expect higher prices because the market clearly has shown us that it did not find an excess. It did not find sellers that are aggressive enough to come in and push price down before the close, and therefore we expect continuation higher. But instead, we shut down on Friday at 4 Chicago time. We opened at 5 Sunday night Chicago time, and in between that time we had a ton of news. Kyiv was attacked multiple times. I don't believe everything that's in the news or that's being reported, especially from a war hot zone. There's a lot of propaganda and incentive for propaganda from both sides, but the Ukrainians are reporting massive losses by the Russians, but they're not reporting any losses from the Ukraine itself by its military forces. They only report civilian casualties. So seems skewed to me, but With that being said, there's a lot of activity there, but there's also a lot of activity from the UN, from the Eurozone, from the United States, from the UK against Russia. And now this morning, there are headlines that Belarus is also going to be sanctioned even further, and is going. They're going to attempt to make it very, very difficult for Belarus to continue to support the Russian incursion into the Ukraine. Belarus apparently has committed some of its own troops towards helping Russia invade Ukraine. So I don't know. It's a big mess. This is a massive risk for Europe. And again, so we have this massive headline risk to contend with this morning. So looking at this profile, right? So we have what's happened here overnight. We could see that there's quite a bit of price discovery here. Big pops, big drops, rallies, switchbacks, a lot of tweezer tops and V bottoms and all kinds of jazz going on here. It's likely to continue that way. We're approaching 500,000 contracts before the market opens. 17 minutes into the market open. This is a fairly active session. So we remain below, and for today, our key levels here are the magnet is up top, is at 43.43. This is a magnet. The magnet is this a high volume node. We came to it, we came off of it, which is what's expected. The over underline is 4,300. If we give up 4,300 on the open, we're likely to start testing towards the overnight low, which is also the support level, which happened to be tagged this morning at 42.50. These are immediate support and resistance. I also have a layer of weekly based magnets, over-unders, support and resistance levels. But this is for today, given today's range expectations. So this morning we're opening between the magnet and the over-under. So we're leaning actually bullish this morning. We're leaning bullish despite the way the market is leaning from an underlying perspective. The overall posture and the narrative is dictating that we're likely to push down and squeeze higher. We have the bonds, the notes higher. We have crude having gapped up. Crude is higher by about $4. Where's crude here? Yeah, crude is up. Crude is up. Where did you go? 3.88%. The metals are up, gapped up, and holding. So it's really a risk-off kind of posture. But my expectation is it's not likely to push to 4,300, and it's likely to squeeze back up and regain this 43.80. It came off this low pretty strong, and on this big news event, the sell-off was immediately bought up. It just seems like money sitting on the sidelines picking up bargains this morning, and that's the expectation for today. So I'm not going to go over Friday's action here. Everybody's got the same charts, and you can see what this market has done, but really it was pretty aggressively bought on Friday. You could see that the counter rotations, looking at this bottom scale, you could see that the bottom red line did not get breached very often, but the upper red line was pushed by the white bars, the white rotations quite a bit. So the market seems to have a bullish stance on what's going on here. I'd leave it at that. I'm not going to dig deeper this morning, as as it makes no sense for me again to draw some lines on here for the expectations. But I did want to come on and say that we did push to the magnet. We're holding below. We're holding above the over-under line. This is really going to dictate I'm expecting this to dictate how the market responds, whether it falls through and pushes to 4250, falls through 4300 and pushes to 4250, or from here, if it re-attacks the magnet, gets us our overnight stat, which leaves us with the prior settle stat and brings us into this acceptance area from Friday. So I'm expecting my lean, if I had a gun to my head and had to choose a side, I would be buying dips this morning, despite the risk off posture that the overall market has taken. The price and volume action overnight is telling me that it's likely to just have a small pullback and then push higher. The overnight inventory is 100%, 100% short, 100% short, and so my expectation is it's likely to attempt to push lower, buyers to step in and push us back into Friday's high volume area or high volume distribution, and potentially into 4380. Okay, so that's it. Good luck today, and I'll catch you tomorrow. Take care.